The military and economic confrontation that we are witnessing and surrounding Venezuela in early 2026 underscores a broader trend. It is the collapse of legacy correspondent bank settlement dominance and the rise of interoperable digital real-time value transfer systems. That trend directly intersects with XRP's core design and institutional value proposition. We are going to explain and expand the analysis across macro trends, settlement, economics, real network adoption data, and XRP's differentiated fundamentals in all this. Structural financial context we'll be looking at will be the global settlement bottleneck, and at the heart of the dollar dominance in the world historically has been control over settlement infrastructure. The correspondent banking ecosystem built around SWIFT, Nostro Vostro pre-funding, and centralized clearinghouses. So when Venezuela bypassed this through the digital yuan, USDT, and alternative rails, it not only reduced exposure to the US financial controls and the US dollar, it demonstrated that value can transfer effectively outside the US jurisdiction as a whole. And this is a material threat to the global reserve currency system, not because of currency choice, not per se, but because of control over the plumbing of settlement itself. Because the XRP ledger and Ripple's architecture are purpose-built to address these settlement inefficiencies that we are witnessing through instant settlement finality. We're talking 3 to 5 seconds versus days for traditional cross-border payments. We're talking near zero transaction fees, enabling efficient value transfer, even at scale. We're talking about built-in decentralized exchange or DEXs and on-ledger liquidity, providing enabling institutions to source and move liquidity without pre-funded accounts. This is crucial here because in the essence, the same economic dislocation that triggered geopolitical force in Venezuela, actually bypassing correspondent banking controls, is exactly, and I mean the exact problem XRP's network is designed to solve. Because XRP's core fundamental utility is to bridge currency and for liquidity optimization. Because XRP's primary use case is on-demand liquidity or ODL, which is what directly tackles the inefficiencies of traditional settlement. Because you don't need for pre-funded Nostro accounts, which lock in capital and lock it up and constrain liquidity at the same time. It eliminates multi-step currency conversations through XRP as an instant bridge between, say, fiat pairs. And institutions can also source FX liquidity in real time with minimal counterparty risk. This is not academic, okay? We're talking real transactions here processed via ODL. Just in Q2 2025 exceeded 1.3 billion in value. We're talking USD in value, 1.3 billion. And that volume reflects actual operational usage, not theoretical adoption. And then when we talk about institutional adoption and say financial flows, we're talking about growing institutional integration is a key data point for fundamental adoption. You know, we're talking with RippleNet, 300 plus institutional partners, talking including banks and remittance operators now use Ripple's infrastructure for payment flows. You know, we're talking Santander, SBI Holdings, Triangular, and others are integrating XRP for RippleNet services into real-world operations also. In 2025, Ripple added approximately 38 new institutional partners or thereabouts and sustained over 90% client retention. That's uncommon performance in enterprise adoption circles. It's not easy what they've achieved. And Ripple stablecoin, ROUSD, and tokenized treasuries now settle on XRPL opening gateway. That's liquidity from traditional capital markets. And Ripple also, in the whole process, raised $500 million at a $40 billion valuation from heavyweight institutional investors like Citadel Securities and Fortress Investment Group, which is a major validation of both the institutional strategy and also capital market interest in underlying infrastructure. And this suggests then that adoption is not only technical, but it's been underwritten by serious capital and treasury desks at the same time. Now let's look at the tokenomics and predictability. As from the supply side of XRP, it has a fixed maximum supply of 100 billion tokens. Also with a controlled escrow release schedule that limits inflationary risk, a structural advantage over tokens with, say, uncapped or highly inflationary issuance. Transaction burn mechanisms also and predictability scarcity add subtle deflationary pressure relative to, say, network usage at the same time. A fixed supply with increasing utilization is a core foundation of long-term value support. And now let's cover the technological architecture that actually aligns with new settlement paradigms. As the economic conflict, that we've witnessed and we've seen in Venezuela, it reflects a deeper need for alternative settlement rails that are interoperable across jurisdictions, low friction, and enforceable without any middlemen, transparent enough for compliance, yet private enough to resist unilateral freezes. This is key here because XRPL's unique consensus protocol offers high throughput. We're talking up to 1,500 TPS a second and settlement efficiency unmatched, say, by older blockchains. Built-in AMM liquidity and on-ledger DEX support also, institutional grade trading and cross-rail liquidity, provisioning, that is massive. And native identity and compliance protocols are being rolled out to satisfy institutional know your customer, which is anti-money laundering laws, as these are a requirement in the financial fees, because these features align with regulators and banks and sovereign actors, as they will require these measures and real-time efficient settlement with compliance safeguards that we just mentioned with AML, rather than unregulated token rails. Let's look at XRP with a macro trend towards multi-rail settlement. Because when central banks build platforms like mBridge or the digital yuan rails, which are being built, the goal isn't to promote any single currency. It is to reduce friction and dependency on legacy systems. The BIS departures from mBridge reflects a broader decentralized impetus towards parallel systems outside Western monetary control. That structural shift, say from a unipolar settlement order to a multipolar settlement architecture, as the world has moved to a multipolar world, disproportionately benefits solutions like XRPL that are not tied to a single sovereign balance sheet. This is key here. Capable of serving any asset on any rail anywhere in the world. Designed for interoperability and integration, not isolation. XRP works as a neutral bridge asset across rails. Precisely what institutions must have in a fragmented settlement world that's multipolar. And when we look at real-world adoption metrics, more than just theory, but theoretical value is one thing, but real usage is another. And key adoption indicators we're going to look at, XRP Ledger now hosts tokenized US treasuries and commercial paper. Institutions now can settle high-grade assets on-chain. We're talking stablecoins are integrated across borders on XRPL. we're talking multiple stable coins that have launched across, say, Brazil, Singapore, and the European Union where I am. They've all launched on it. And XRP support projects show actual institutional demand beyond payments. We're talking including liquidity, provisioning, and actual tokenized financial products on chain. And these developments reflect movement, okay, beyond pure remittance tech, but towards actual infrastructure capable of supporting systemic financial global flows. And the dollar exit thesis and XRP's tailwinds also combined. The Venezuelan dollar exit thesis highlights two macro realities, and they are keenly fundamental. Settlement sovereignty trumps actual currency preference. Nations, okay, and large economic actors, they want control over how value moves. That's key here. Not necessarily what, say, a unity is denominated in. If it's in AUD, USD, doesn't matter. Frictionless, has to be interoperable. Settlement is the defining infrastructure battleground because XRP excels in both because it is actually designed for value transfer rather than passive store of value narratives. You know what I mean? It focuses on institutional utility, not retail speculation. And that places it in the realm of operational infrastructure, not speculative instruments, because its adoption curve parallels financial digitization, not crypto market cycles. Now, okay, let's look at the long-term fundamental bullish drivers that taken together will give a bullish fundamental thesis case for XRP and what it's grounded in. It's grounded in real institutional usage growth, okay? We're talking technical design aligned with post-correspondent settlement needs. We're talking network effects driven by actual liquidity and interoperability. Macro regime shifts towards decentralized settlement rails. We're talking capital commitment from actual institutional investors validating long-term infrastructure and also fixed token supply and also predictable issuance supporting fundamental demand actual growth. These are structural fundamentals. They're not short-term price catalysts. The bottom line in all this, the Venezuelan conflict, okay, it underscored a global systemic shift away from centralized correspondent banking towards an interoperable, real-time settlement powered by digital rails and alternative liquidity mechanisms. XRP is uniquely positioned to be both a beneficiary and enabler of this transition because it was built for precisely the use case the market now urgently needs, which is efficient capital, light, compliant, settlement across fragmented financial systems in an ever-growing multipolar world. That alignment is why this geopolitical moment from Venezuela is fundamentally bullish for XRP from a structural, institutional, and macro financial perspective. Not because of speculation, but because the underlying economic conditions that are actually going to drive adoption and real world usage is accelerating. And remember, the game is changing and those who understand it first will benefit most. It's key here. Make sure you're on the right side of it because you have two choices. You know, you can be like the crowd reacting after the move, rationalizing why they missed it, telling themselves, don't ever let it happen again. Or the key here, you can be the actual one who saw behind the actual curtains, the one who actually understood the infrastructure shift that was going behind the scenes, the one who positioned early, not randomly, but intentionally being informed, because some moments in history are loud, but the ones that actually position themselves change everything and are quiet right up until the moment they're not. And this is one of those moments that we're going through. So do not blink, because the world is distracting you with noise. While XRP, it continues developing behind the scenes and building momentum in broader digital asset landscape. So stay sharp, stay informed, and accumulate knowledge. This is key. Knowledge is the most valuable asset. Your move now will be remembered because this is not the end of the story here. This is just the beginning. If this actually opened your eyes, I hope, smash that like button and ring the bell and leave a comment with your thoughts. And if you have any questions, feel free to write them. Turn on notifications, and most importantly also, subscribe to the Crypto Republic, because we break down the major banking trends shaping digital assets today and giving you also the context, clarity, and research that you can use then. So don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.